Hello, everyone, and welcome to this exclusive GoldenPi session on the launch of our latest NCD offering. We're excited to have you all here today as we dive into everything that you need to know about this NCD, which is available exclusively for our GoldenPi customers. So, before we get into the specifics, let's set the context. Dvara KGFS, the company behind this NCD issuance, has a very unique and powerful story in the rural financing services space. From its humble beginnings, driven by a mission of financial inclusion to its significant growth over the years, Dvara KGFS has continuously evolved, adapting to the needs of its customers across the country. So today, I'm going to have a very interesting conversation with Mr. Abhijit Roy, the CEO and the co-founder of GoldenPi. He will take us through the key details, provide us insights into the origin and mission of Dvara KGFS, its expansion strategies, and the rationale behind this NCD issuance. Some of the key areas we will be covering today include how Dvara KGFS came into existence and the vision behind it, an impressive growth in their asset under management and expansion strategies across regions, how they're managing their risk and maintaining a strong market position, and of course, we'll be answering your most frequently asked question about this NCD, including interest rates, covenants, and potential benefits. So without any further ado, let's dive right in. Abhijit, hi, how are you doing today?
Thanks, Shambhavi, for setting up this discussion. I'm super excited to have this conversation on Dvara KGFS.
Yeah, I mean, pretty interesting offering, isn't it? So, before we dive into the financials and more technical and data details, let's understand, Abhijit, what is Dwara? Like, what do they do? And just a little about to know who is Dwara.
Yeah, I think that's a good starting point for our viewers. Uh, so, Dvara Kshetriya Gramin Financial Services Limited, or Dvara KGFS, is a rural financial services company that was established in 2008 by Dvara Trust. Now, a lot of people would be able to relate that Dvara Trust is also the founding company or the parent entity of Northern Arc Capital, which is a very well-known NBFC. And actually, Dvara KGFS that we're discussing today and Northern Arc have a lot of common promoters on the board. Now, coming to its business area, Dvara focuses on providing secured and unsecured loans primarily to underserved rural regions in the country. And it operates across 10 states with 395 branches. And the total number of investors, right, or people that it is serving with its loans is 1.2 million customers. And it's a profitable NBFC.
Wow, that's very interesting to know because that's a great customer base. Okay, so we have seen Dwara KGFS experience a very significant growth in their asset under management, as I've also mentioned, during the start of this session, and particularly in FY24. What strategies do you think have contributed to their success, and how can they sustain such an impressive growth?
Great question. Uh, I think, of the multiple things that they have been able to do well, three primary things that stand out for me. First one is the diversification of the loan portfolio, right? Second is they did some key strategic acquisitions like taking over around 25.9% stake in Saija Finance, which is another NBFC. And third, they expanded the geographical reach beyond Tamil Nadu and Bihar, essentially from where they had initiated their business, right? Now, the company's business model, if you look at it, this is called as the JLG model or the Joint Liability Group model. What this means is basically, it's a group of individuals, right, who are doing certain entrepreneurial ventures. Maybe, they are knitting clothes. Maybe they are, coming up with some kind of handmade products, right? Consortium of women, right, who are into this business. Dwara would give them loans to run their business, right? So this is called the joint liabilities group because all these women are liable to pay back the loan. And typically the success rate over here, right, is significantly high. So that is one of the areas in which they have been be able to operate very well. Secondly, they also give enterprise loans, right? And with this combination, they have been able to show a very good collection efficiency. See, it is very important to understand that collection efficiency is one of the key metrics of success of any NBFC. Why? Because, lending money is not a big deal. But being able to collect back the principal amount along with the interest, right? That is what marks the success of an NBFC. And Dwara has been able to execute that very well. It has enhanced its operational efficiencies also that has contributed to its success. I think, as they continue to diversify, right, go beyond the current geographical locations in which they are there, and they start focusing more on technological adoption, right, to streamline their processes, onboard new set of customers, disburse loans, get the collections in time, right? They are going to maintain the streak of success going ahead.
That's amazing to know. And this brings me to my follow-up question, Abhijit. As an investor, because investment is something that we do with a future prospect of things. Now, coming to understanding the future prospect of Dwara's growth, what do you anticipate with this, and what do you currently, as per your observation, think of it?
Uh, I think, the growth prospects, right, are very significant for this company, given, the way in which they're being able to operate very efficiently, right? One of the key things that stands out over here is basically the credit worthiness of the creditors, which they were evaluating in a very good way, which means they are being able to locate the set of lenders, exact set of borrowers to whom, they can actually lend the loans, so that there is a high recollection efficiency that they can have in their system, right? Now, like I mentioned, Dwara has a significant potential to expand its customer base in rural areas by leveraging its existing presence and also the infrastructure that it has built over the years. Remember the point, Shambhavi, that this company was set up in 2008, right?
Yes.
So we are in 2024. So that's like 14 years,
Years.
16 years, actually,
Yeah.
right? You're close to 2 decades of operation of this particular NBFC, right? Now, they could scale their lending business further by focusing on digital inclusion. Till date, a lot of the focus has been on this joint liabilities group model, wherein it is in the rural areas, women folk to whom lending is being done, and some amount of enterprise lending. But along with digital inclusion, I think they can start coming up with new loan products tailored to specific local needs, and have a lot of increase in presence in existing states like Odisha and Bihar, where they can get a lot more penetration with respect to the customer profile. And of course, partnership with fintechs and microfinance institutions could also enhance their sustainability.
Abhijit, how do you think Dwara KGFS is going to ensure sufficient liquidity to meet their obligations? What strategies might they employ to make an adequate capital position while also scaling their business?
Yeah, that's a very important thing, for an NBFC. Why? Because you see, for NBFCs, the dry powder, right? Or you can say, the basic commodity is basically money that they are borrowing from the market, from various entities, right? And then they are lending forward, right? So there would be situations wherein they will have to, of course, pay back this money also, the NBFC, to the lenders from whom they have lent, right? They have borrowed the capital. So here in this aspect, one of the key things or ratios that is normally looked in for an NBFC is the liquidity cover ratio. Now, for our viewers, it's important to understand what is a liquidity cover ratio. It essentially means what is the proportion of the highly liquid assets, cash and cash equivalent that you would have to be able to meet your short-term obligations of paying back loans that you might have taken, and also if there might be certain market disruptions like COVID, right?
Yes.
Now here, this liquidity cover ratio that Dwara has been able to maintain is very healthy. It's at the state of 1.18x, right? And it holds cash reserves to the tune of 243 crores as of 31st August 2024, right? Now strategies to maintain liquidity could also include managing the maturity of the various debt that they have taken from the market, right? Raising equity capital. Why? Because when you raise more equity capital, then you can raise debt capital as a multiple of that one, right? So you can have more debt that you can actually take in, right, which you can use once again to pay back your short term obligations which is there. And they ensure steady collections from the borrowers to whom they have lent the money, right? Especially in challenging periods like COVID that we had seen. So that's how they have been able to manage this, the liquidity scenario very well.
That's an interesting bit of information because yeah, like you said, it's very important for NBFCs particularly. Now, moving on to the next question, Abhijit, their gearing has increased significantly as we have seen. Do you think that there are provisions in place to reduce it, or could they raise it further to meet their future needs?
Yeah. So once again, we'll have to start here by understanding what is the gearing ratio, right? So the
Yes.
gearing ratio is a key financial parameter which actually compares some form of the capital or owner's equity to the funds which is borrowed by the company from outside, right? Now, in this respect, the gearing ratio for Dwara KGFS has been 4.7x, and this is as of June 2024. Now,
Yes.
Dwara KGFS may need to raise further equity capital or generate higher profits to reduce this gearing. However, if they plan to scale aggressively, it is possible that they may raise their gearing further by accessing additional debt.
Okay. So, Vijay, Dwara Capital has strong backing from reputable investors. How does this capital structure strengthen the company, and how does the overlap with Northern Arc Capital's investor enhance their credibility?
Yeah, that's a very important question because you understand about the quality of a company uh, by looking at a lot of parameters, of which one of them is who are the entities who are backing this company, right? I mean, who are the entities who have taken that faith in this company to invest their capital and be on the cap table. So let's just understand who all are there on the cap table of Dwara. One is, we know that Dwara Trust is there, which also is there on the cap table of Northern Arc Capital, right? Apart from this, we have got Axion Africa Asia Investment Company, Leapfrog Financial Inclusion India, Fund 2, Stakeboard Capital Fund 1, NMI Fund 4 KS, and the Dwara KGFS Trust, which is there, right? So as you can see, there are a lot of marquee investors who have shown their backing for this company because understandably the company's business model, their financials and all, right? Now the other part which is very important that you asked is how does relationship with Capital enhance its position? See, uh, sharing investors with Northern Arc Capital adds credibility, right? Because Northern Arc Capital itself is a very well-known NBFC performing very well. And it also reflects that there is a mutual focus on financial inclusion and strengthening the company's operations and growth potential. So basically, in short, Northern Arc Capital has deployed a significant amount of capital into Dwara as well, right? Which Dwara utilizes to, create its loan books by lending to borrowers, right? So there is a mutual focus, a mutual working together across these two companies to forward the financial inclusion landscape in a country.
Now, coming to the growth and expansion plans, Abhijit, Dwara KGFS has seen impressive asset under management growth of 27% year over year. What strategies have driven this growth, first of all, and how do you, think that they're going to sustain this momentum in the coming years?
Right, right. See, the fact itself that their AUM has grown by 27% year over year, uh, to currently a value of 2,251 crore as of March 2024, right? That is strongly backed by the disbursements, which has also grown at 17%, right? Now, this growth primarily has been fueled by one, their expanding geographical presence, right? So they have been covering more number of pin codes, more number of states, right? And that ways they have been accessing a larger borrower pool. That's one. Number two is, like I'd mentioned before, they have acquired stakes of 25.9% in other NBCs like Saija Finance, right? And they have leveraged partnerships with business correspondents and fintechs, right? So it has been pretty much a three-pronged strategy by virtue of which they have grown their AUM 27% YOY. Yeah.
And that's quite a number. I mean, 27% year on year is quite a number. But talking about numbers, I think their profit, which is profit after tax, has also grown rapidly. Let's have a detailed look at their growth trajectory from for the past few years, starting March 22. So, Abhijit, how do you see this entire trajectory growing, especially with regards to their profit and their total income, the revenue, essentially?
Yeah, it's important for investors to consider these financial numbers. They are very basic data, but still, it is important for investors to understand that whether the revenue of the company, is stabilized, is it increasing, right? Is it decreasing? And then correspondingly, has the profit after tax has also been showing a similar trend, right? Is it increasing, which means the company is doing well? Is it flat? That means the company is facing some challenges. And going down means certainly, it is getting into financial trouble, right? So if we look at the Dwara numbers, right, from the revenue perspective, so for March 2022, FY 22, right, which is just when companies had gotten out of the COVID zone, right? The world got out of the COVID zone. Their total income, their revenue was 287 crores, right? Next, uh, March 2023, right? The revenue was 382 crores. Then March 2024, which is the last FY that we closed, it was 567 crores. And as of 30th June 2024, which is like quarter one of FY 25, they have done already 145 crores in revenue, right? Very impressive numbers with respect to the growth. Now, if you look at the profit after tax, in March 22, it was just 0.57 crores. In 31st March 2024, which is like the last financial year that we closed, it was at 47.52 crores, right? Massive jump since post-COVID days till, the last financial year closure. And of, quarter one, 2025, FY 25, if we consider, for this quarter one itself, they have clocked a profit after tax of 11.95 crores.
Indeed, very impressive. Like you mentioned, the company has recorded a profit after tax, which is PAT of 448 crore rupees in FY24 alone, which is significantly higher than what they did in the previous year, which is 14 crore. What are the key drivers behind such an improvement, and how do you think they plan to maintain or exceed this profitability, given that they've already made a profit of about 12 crores in this financial year, quarter one?
The significant increase in PAT was primarily driven by improved operational efficiency. Number one. Number two, better loan yields, right? And third was a more streamlined cost structure, which they have been able to put in place. The company has also worked to improve the asset quality, which has helped bolster profitability. So going forward, Dwara KGFS as we understand, is aiming to maintain this upward trend by further enhancing efficiencies, expanding its product offerings. It's looking to bring out more nuanced products suited to the specific investor cohorts that they're acquiring, right? And ensuring their collection efficiency always remains better, than the previous time. The collection efficiency keeps on improving.
Okay, that's interesting. And coming to another very important and crucial aspect, that is capital adequacy ratio, otherwise known as CAR or CAR of 21%. How do you think that they plan to utilize this financial stability to support, let's say, future growth?
One thing important to consider over here, Shambhavi, is that for NBFCs, right, it is always important to maintain a healthy leverage ratio, right? That means how much of loan or debt are you taking, and what is the ratio of the debt to your equity, right? Now, what happens is a high capital adequacy ratio of around 22% for this entity provides to them a very strong buffer for the company to continue growing its lending portfolio, right? And as you understand, they are lending this by taking debt onto their balance sheet, which they are lending, right? Now, because they have this high capital adequacy ratio, though they're taking up debt, right, externally onto their balance sheet, and then they are increasing their loan book, this is not leading them to become over leveraged, which is a very, very important point. That means they are not taking up more debt than is permissible by RBI with respect to the equity infusion that they have in the company. This strong financial stability will be used to support strategic expansions into new regions and customer segments, and as well as to strengthen the operations in its high growth areas.
Very interesting piece of information, Abhijit. And as much as I think maintaining debt ratio is important, another important factor over here that comes in is NPAs. Now, GNPAs and NPAs is something that I would like you to shed some light on. First, to understand what are GNPA and NPA and what is the difference there. And also, again, what is the value that it holds in Dwara's balance sheet now, and how is it going to affect the overall investor perspective?
Right, right. See, NPA is a very key metric about how good an NBFC is. NPA simply means non-performing asset. So let's say I, as an NBFC, have lent out 100 rupees, and of which I know 3 rupees is bad loans. I will never recover it back, right? That is my gross NPA. Now, at the beginning of the year itself, I will do some statistical calculations, and I'll know that probably this much amount of loans can go bad, and I'll keep some provisions in my balance sheet, right? Then my NNPA, let's say, will be gross NPA after removing the provisions that I have already taken care of. So let's say my gross NPA is 3 rupees. My provisions was 2 rupees that I had set in my balance sheet. So my net NPA will stand at 1 rupee, right? Or 3% and 1% in terms of percentage, right? So as you can see, that's a good measure of out of the total lending that I have done, how much percentage of it is bad loans, right? That is the indication of NPA. Now, with respect to Dwara, the gross NPA has reduced to 3.2% from 4% in March 2023, which means the lower the NPA, the better is the collection efficiency, the better are the quality of customers or borrowers that the NBFC is sourcing to lend money, right? That means its whole lending engine is working well, right? So for Dwara, like I mentioned, it has reduced to 3.2%. And the net NPA has improved to 1.37% from 2.36% during the same period. Now, this improvement reflects the company's focus on efficient loan recovery process, as you can understand, right? It is very tightly coupled to how efficiently you can recover those money from those bad loans, right? And they have been fine-tuning that process, which is helping them bring down the NPA and also the ability to control the non-performing assets even in challenging economic environment. And like once I had mentioned before in one of the prior discussion points that we had, they have also been getting better with assessing the borrower quality, the credit worthiness of the borrowers, which means they're getting better pool of borrowers into their pools who will pay them back on time.
Indeed, indeed. And I think also, Abhijit, as I recall, that recovery rate was about 96%. And when I was reading this data, I found it quite impressive myself, because in rural region, that too, that is indeed really, really impressive. So as we move towards the end of our discussion, Abhijit, we know that Dwara KGFS has demonstrated steady growth in its net worth over the years. Could you provide insight into the company's current net worth and how it supports its entire, financial stability?
See, as of June 2024, Dwara KGF's net worth stood at around 388 crore. Firstly, this reflects a very strong capital base of the company. You have to understand that even in case of any economic shocks, any market volatility, the company can withstand shock, right? Because it has been standing on this net worth. Number one. Number two, this robust net worth also provides the company with financial stability and ensures that it has sufficient capital buffers to absorb potential risks while supporting future growth. Like if the company is doing experiments with new business models, and let's say there is a setback, it has the capital available at disposal, which will help it, in overcoming that setback, if that may happen, right? I'm just giving a hypothetical scenario. That's how you look at a strong net worth of any company. Now, the company has also raised capital through strategic channels and which further strengthens its financial positions, right? So, as I showed to you, we discussed about very marquee investors who are there on the cap table of Dwara KGFS. And on top of that, Nordla Capital, which is a very well-known NBC, has also deployed a large amount of debt capital into Dwara, right? So I think all this points to a very positive direction for this particular entity.
Showstopper question, which is very, very interesting as well as intriguing, because this is the first time GoldenPi has come up with an exclusive product. So why is this Dwara KGFS product available only for the GoldenPi family? And, alongside that, what all benefits do we get as perks, out of this exclusivity?
Yeah, I think that's a natural question that would come into any person's mind who is from the Golden Pie community or otherwise. See, this has been our attempt to offer a benefit of curated exclusive investment opportunities only to available on GoldenPi platform for the GoldenPi community of over 9 lakh users. And Dwara KGFS bond is a first such attempt to put a paper which is available only exclusively on GoldenPi. I mean, you won't get it on any other online platform. Now, this paper specifically, right? This is a senior secured bond, number one. Number two, and very important, this is a privately placed bond, and this is available at 10,000 ticket size. A lot of our investors, right, has given us a feedback that privately placed bonds used to be available at 1 lakh ticket size, right? And we used to get that feedback from our investors that why can't you offer us something at a lower ticket value? Because we don't have, or we don't want to invest 1 lakh in one single paper in one shot, right? This becomes a very unique proposition. This paper becomes a very unique proposition for investors who are looking at 10,000 ticket size or multiples of that one, right? So, low ticket size, senior secured bond. Third is the yield on this paper is 12%, and you are able to earn monthly cash flow from this particular bond. So, which means any investor investing their money over here, whatever amount they want to put in, they are building up a passive income source of monthly cash flow by investing into this bond. Now, Dwara KGFS, right? Like we discussed during this discussion, right? We understand is a profit-making NBFC running for the past 16 years. It has been promoted by Dvara Trust, which also happens to be the promoters of Northern Arc Capital, right? Dwara KGFS has a very strong working relationship with Northern Arc Capital, which is a very strong NBFC, right? Dwara has been able to improve their PAT significantly to 48 crores as we speak, right, of the last financial year, right? The AUM has grown at a stellar pace of 27% year on year, right, and currently stands at 2,251 crores. All in all, profit-making NBFC with a bond from this NBFC, which is senior secured, offering 12% returns with monthly cash flow built, right? And one can invest at 10,000 ticket size, right? I think that's like the kind of sweet spot that this paper builds up for investors.
That's That's awesome. I think we had a very insightful and very interesting discussion today, Abhijit. On this note, we're going to be concluding our today's session. I hope everybody who's watching this session enjoyed it thoroughly. Guys, if you have any question, feel free to drop them in the comment section below, and our team will be very happy to respond over there and connect with you for further information. Till then, go to our website, explore this amazing Dwara KGFS paper, and also drop us your notes and feedbacks on what you think about GoldenPi and the product. We'll see you again next time. Till then, stay tuned and make sure to subscribe our YouTube channel.
Thank you, everybody.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.